Hello, ladies and gentlemen, welcome to Corp Insight, your source for business, finance, economy, and market news. We break down complex developments into simple, easy to understand insights that help you stay informed and ahead. Let's dive into today's story. India's economy just got bigger than expected. GDP crossed 346 trillion in 2025 to 2026. Yet despite this growth, India slipped from the world's fifth largest economy to sixth place. How can any economy grow and still lose its ranking? The answer lies in one powerful factor: the value of Indian rupee. According to revised government estimates, India's GDP expanded to approximately rupees 346.36 trillion in financial year 26. This was slightly higher than earlier projections and confirms that India's economy continues to grow strongly. Between financial year 21 and 26, India's nominal GDP grew at an annual rate around 10.8%. However, global rankings are measured in US dollars, not Indian rupees. That's where the challenge begins. What happened? In rupee terms, India's economy expanded significantly, but when converted into dollars, India's GDP reached around $4.3 trillion. The United Kingdom recorded roughly $4.9 trillion, while Japan stood at around $4.17 trillion. As a result, India moved down from 5th place to 6th place globally, even though the economy itself continued to grow. The biggest reason behind the ranking drop is currency depreciation. Imagine India's economy grows by 10% in rupee terms, but if the rupee weakens by 5% against the dollar, a large part of that growth disappears. When the economy is converted into US dollars, over the years, the Indian rupee has steadily weakened against dollar. Because global GDP rankings use dollar values, the depreciation reduces India's economic size in international comparisons. In simple words, my friends, India produced more goods and services, but the weaker rupee reduced their value when measured in dollars. Is this a bad news? Not necessarily. India's domestic economy remains strong. Consumption, services, manufacturing, and infrastructure spending continue to support growth. The fall in ranking does not mean the economy shrank. It simply means exchange rate movements affected how India's GDP appears in dollars terms. Many economists focus more on real economic growth, jobs, productivity, and income levels rather than temporary ranking changes. What happens next? If India continues to maintain high growth rates, experts believe it can regain and surpass its previous ranking in the coming years. The key factors to watch include economic growth, rupee stability, exports, foreign investment, manufacturing expansion. If these remain strong, India could once again move up the global GDP rankings. Let's have some fun while learning. Did India's economy shrink? The answer is no. India's economy actually grew to 346.36 trillion in rupees. Why did India fall to 6th place? Because GDP rankings are measured in US dollars and the rupee weakened. Who overtook India? The UK and Japan remained ahead in dollar terms. Is this a dangerous sign? Not immediately. Domestic economic growth remains strong. Can India return to 5th place? Of course, yes, if economic growth remains strong and currency stability improves. So what do you think? Does global GDP ranking matter more, or should we focus on real economic growth and living standards? Let us know in the comments. Follow for business and economy insights and subscribe to Corp Insight for your daily updates. Thanks for watching.